you have to keep in mind that you've taken out $40,000 worth of boxes. So over here on the left, this 10 lot with 4 strikes apart, it's a $40,000 box. It's dissected out, but it's got a value of $39,994. Okay, here's the question. Why is it worth only $39.94? Class, you all got it right. Yeah, present value. So it's a present value of 40, with these few days to go, 22 days to go, at this interest rate that's set up here of 0.25% it's set to. It wouldn't be much more even if it was set to 1%. So we make this 1%. It's going to make the present value after it does the calculation. Now it's $39,976, $20 other dollars. On 40,000, it's hardly anything, right? So that's what this is doing. It's dissecting out the boxes for you, and you want to see the real position because when it comes down to pin risk, which we had in this, you want to be cognizant of that when you're making your final trades or letting it go if that's the case. But you can see that there's no Greeks, or they're amounting to very little. It's all rho, just the interest rate. There's a little bit of theta, but that's actually rho, part of the rho, because most models include that. And this would have deltas, gammas, vegas, and thetas if there was a lot of time left. But that's another story too, Chapter 8. It's an insomniac's favorite chapter. It helps put you to sleep. So there's the butterfly that we have. And we can look at it as an all-call butterfly by setting our pivot strike down to, say, 460. That would be an all-call butterfly synthetically, going for $7,600 as the value of it, $7,600 on the table. Or all-put butterfly, if we set this higher, like at, say, 540, and that would value it also at $7,660. This is a box. The only difference between call butterfly and put butterfly is a double box, long one and short one. But the iron butterfly is going to be the reciprocal of that. It's 20 points away. So if we set this at 490, back to 490, we should have, take that 7660 subtracted from 20 grand, and it should be 13 or 12,340, right? 12,340? Nope, it's not. Why am I being stupid? It says it's 2760. What am I doing wrong? It's $20, 474.90. Oh, because it's taking out this other butterfly against it too. So it's not just that. All right, but if we simulate, let's trade out of a box. Let's sell 10 to the position up here in the simulation. Let's buy that box back to see what the effect is. The model has it worth, this present value up here in the simulated trade. And down here now, there's this box here is 20,000. Over here, another box, because the difference between an iron and an all-put butterfly is one box. That's 20,000. So the liquidating value, see, I had the premium. That's where we traded it. So I was looking at the wrong thing with the 7,600. It's here. So the reciprocal value of subtracting what the liquidating value of this butterfly is, $4,300, subtracted from the almost $20,000 that the box is worth, is 15,661 for the iron. That's the difference. About almost 15,700. So that's what would be the credit there. Okay. Hope you enjoyed all that confusion. You'll have to play that back 12 times to get it straight, but it's all in there roundabout way. All right, so back to our heroes. Where were we? Should we go on to the next trade? Yes, I think we should. Okay, after trade 10, here's the dissection. It's these 10 big butterflies, but it's broken down into 40 baby butterflies. 10 here, 20 here, 10 here, and here's where the money is. Adding up to that $4,300, there's $985 on the table for that 500. There is $2,200 for the 20 lot, etc. And here are the values of those. $1.13, $1.10, and 98 still have not blossomed. Okay. Oh, after trade 10B. Okay, here's another way to look at it. Okay, with the spread dissection, you can look at it all as verticals. Because maybe as the market is bobbing and weaving, going to support and resistance, you're just going to leg verticals here and here, and this is how you could do it. And that will remove all those butterflies, because you'll see that the SD1 and SD2 is that first butterfly at 500. SD3 and SD4 is that second butterfly at 480. And what's left over, because I didn't dissect it, just showing you that it's left over, it is a butterfly, an iron, is at 490. So you could, look at it that way. A lot of flexibility. And there are all the graphs of each one of those pieces. Okay, so now what's this? This is, let's zoom out and see what this is. It's probably the next chronological thing to do. Oh, we rallied up, and I bought a vertical, a bear spread. Why did I do that? Well, the market was at, what does it say, 505. Okay, haven't seen a diametric grid for a while. And this is, then we were down at 499, and I bought this back. So let's see if I have diametric grids to support why I did that. So I legged out of a butterfly, basically. I bought this 20-point vertical, and I sold a 20-point vertical. Okay? In effect, it's a condor, because they're sort of intersecting with each other. And let's see the diametric grids. Okay, so up at 505, we were in the wick zone here, and then we broke down, and we hit this little notch here, the down thing, and I said, okay, that's a nice little leg. I'll take it. So this is trade 11 and 12. So let's go back and just see what I did. 11 and 12, let's make this bigger. It's just a nice little scalp. Trade 11 and 12. So the balance forward is just a function of the software, because it only shows 20. I split it up for the PDF. All right, so on June 3rd, I did the bear spread, trade 11. Here's the result. And in the next post trade 11 line, and then trade 12 on June 4th, I did this other vertical, a bull spread. Now look at it. In effect, I've sold a condor, right? I sold the 470 in the trade 11 row. Here, I'll show you the row labels. Row 74 and 75, trade 11. Sold the 470 puts. That's a wing of a condor. And in rows 80 and 81, trade 12, on the other side of the leg, I sold the 500 put. So those are the wings of the condor, and the bodies are 480 and 490 in these two rows too. What did I get for these things? Well, I did 10 apiece, and I took in $2,700 on the set. I paid $2,700, and I got for this one $6,900. So subtract the two, $4,300. Right, $4,280 is what I got. What did I get? What did I do? I sold a condor. That's 2 butterflies in a row. I got $4,200. Well, I did 10 of them, so that's $420. That's $4.20 for each condor. That's like $2.10 for each butterfly. But weren't the butterflies going for like $1.10? Yeah. So they were, but by legging it and being right, thank God, I sold them for twice as much. Okay, maybe later one of those butterflies was totally, well, they both went out worthless, as it turns out, because we died at 500. So legging out of that was harvesting in a safe manner, these nice limited risk plays at my support resistance. This was June 3rd and June 4th, and the diametric grid, I keep forgetting what page I was on, sorry. See, right. This is June 4th, right? And the grids came afterwards, didn't they? Okay. So let's see what these say. Wait, the software says, let me zoom out. We can see the date in Thinkorswim. It says here, where is the date? Oh, I can't read it, even with my glasses. 450. Okay. This says 6.9. So this is 6.9. So we got to count back days. Oh boy. Was there a Friday in there? Oh, this is where I need to consult my calendar. Okay, June 9th. So 8, 7. So we made these on the Friday and on the Thursday and Friday. So how many days? How many bars? 1. Today's. Good. 3 bars. The 4th bar from the end is where I took the profits. Okay. 4th bar from the end. 1, 2, 3, 4 is where I took the profits. So here they are. It rallied up on this green bar up. It came down, and that's where I took my profits on this down day. Okay, just a simple scalp, and that's what that was about on that chart. And okay, there was only one chart to support that. Why I did that. Okay, now it then came down on the 9th. It came down to that bar. Oh, do we have anything to buy? Are we short? Can we buy some cheap deltas? Can we spend a little money? Okay, so let's see. Yeah, I do a bull spread. Down here, I was actually long, and the adjustment, I said, let's get longer here. So I had on a condor left, and I bought a vertical at this point to leg out of the condor, leaving me with a bull spread. Came down to support diametrically, gave me a reason, pulled the trigger, boom. Paid $900, so 90 cents a piece for this piece of my short inventory. Bought it back, 90 cents. Had a reason, technically. And then we bounced up a little and hit the bar again, then this other crossbar coming down. And so I sold it out. I sold something else. What'd I get for that? I got $3,000 for that one. All right. So before, this is the 495.100. What did I buy? That's the part I didn't pay attention to. I bought the 500, 510. So I bought a higher one. I'm selling a lower one. So in effect, I'm selling a butterfly out. So what did I get for that butterfly? Well, I paid 900, sold this one, and got 3,000. So I got about $2 for this butterfly. What are the butterflies going for? Well, the butterfly pricing at the moment, the greatest one at the money is like $1.81. The 500 one is $1.35. That's the one I sold. I sold the 500 for over $2, and it's going for $1.35. Now you might say, stupid. That's the one that went to $10. Yeah. Hate when that happens, but what am I left with? I'm going to be left with a butterfly, the magenta. And we're almost done with the saga. Looks like we rallied up. I just said, it wasn't at resistance, but there's one chart, there's another one. It was close to this mid-channel here. So I said, okay, let's buy back the put spread of the butterfly concept, do a bear spread. What we pay? This one costs this was buying, sorry. This is selling a call spread again. It's buying a put spread for like less than $1, 70 cents. I simulated it with the call spread again. There I go. Not managing my simulations properly in retrospect. And it's all correct in the forum. And then I sold it out. Do I say where I sold it out? Oh, I guess this was pasted in. Oh,